Peter Eliades with you. This is the Stock Market Cycles update for Tuesday, January 28th. Big up day today. A little bit unexpected, but with a kind of quick oversold condition we had, not completely out of line. Does it change things is the obvious question. Well, let's take a look at a couple of charts and see how, and if it does, how it changes things. This is the New York Composite Index closing price chart. As we've told you often, it's the most consistently reliable projection generator because it includes all the stocks on the New York Stock Exchange. So we have a projection here that's unfulfilled to the downside, calling for 13,614 rounded off and 13,700 rounded off. And you can see that we missed it, not by a lot, but we definitely missed it. We did not get inside the box. Does today change that? Well, no, you can also see today does not change that. We have not invalidated, have not gone above either one of these lines. You need to get above both of them in order to have a complete invalidation. And tomorrow there's going to be even a little more room up into this area of maybe 13,935 or 40. So there's even room for a further rally without invalidating. So we're still looking for that. Now, keep that in mind and also look at the next longer projection on the New York Composite Index. Remember, let me move this over some. We put this dark rectangle in here. That's not a projection on this chart. It is showing you a projection from the prior chart and saying, you can see if we get down here, we're definitely going to generate a lower projection than the one we have already. Now, yesterday, we looked like we had a preliminary to the downside here, was not confirmed, and today we rallied back above that. So it's important over the next day or two what happens here in terms of getting further downside projections. So far, we don't have them. We do have a projection into this area that we have to watch, the possibility of invalidation. So that's the New York Composite Index. Now watch this. This is the S&P 500 closing price chart, same offset as the one that gave the nice downside on the New York Composite. Look at this. Yesterday was really close to confirming downside projections. In fact, let's zoom in on that and see if indeed, if it did give it, it was very close to confirming. But yeah, in fact, we can see from here that it was given and confirmed, but barely. That's not a high confidence projection when you close that close to the line. And today snapped right back above both of those lines, so there is no downside projection here. So knowing that, let's go back and look at the chart before that. Look at this. We met a projection yesterday down here. We had this big rally today. No effect from those that projection in terms of this offset. So the S&P is not the same as the New York. The S&P's calling into question any further downside. So it's kind of a battle between the two of them as to what the resolution is going to be for the next move here. Based on the longer-term things we've talked about, the S&P meeting its really long-term upside projection, nominal 40-week to the high side, that suggests that we're going to start to get further downside projections. But there's no law written saying that we have to do something like that. So the market's in an indecisive position right now in terms of projections, and it bears close watching over the next day or two because we should be able to get a lot of information from that. Now, that much having been said, let me show you one more chart, and this is of the Russell 2000 ETF. Okay, here's that Russell chart. I know it looks very messy in here, and there's a lot of lines that we probably don't need in here. But a couple of things to point out here. You saw this upside projection. We didn't show this at the time, but look at it. Here it is. Talk about meeting the upside, the upper side, uppermost side of a projection. Look at this. This bar here, it was almost like the S&P at the top of its nominal 40-week projection. You had this one big bar at the opening on January 17th. That marked the top, right at the top of this projection window. But that's not important now. What's important now is we do have downside projections here that were unmet. Here's the low right here, and here's what the projections are calling for. Now, we're also very close to invalidating here. So there is a reason to favor further downside from here based on both this, the IWM, which is the ETF for the Russell 2000, and the New York Composite Index, which is all the stocks on the New York Stock Exchange. So indecisive because of differences between two different groups of charts, the overall market and some of the more highly capitalized ones. There's one more chart I want to show you. Remember our old friend, the New York Composite Index, and this black line? It doesn't mean much the way you're looking at it there, so let's make it mean a lot more and bring you a lot more information with that line and show you how important it's been for those of you who are new to this line. This has been an incredible line on the New York Composite Index. This is all the way back in '09. Once we moved above the line, you come down to it here, a couple of days underneath it. It's support there, support here, and here. Stayed above it. Finally, in 2015, that's 6 years after the 2009 bottom, we finally got it below it a little bit for a couple of days, immediately back above it. So there was kind of an indecision pattern here. Then you broke below it, and then you came up to it. It was resistance. Came down, came up to it 1, 2, 3, 4, a whole bunch of times in 2016. And now we finally started breaking above it again in 2017. So it got interesting after that because the line maintained its importance. Look at this. You finally got above it here. Support came down came down to support. Even the big break in 2018 in January, that's right here, came down, supported, came down, supported, down, supported here. Now the break in later 2018 broke below it, okay? And again, attempt back up, no. Back up, no. Back up, and here we go. This was in November and December of 2019. And finally, it looked like we were breaking decisively above it in December. This might have been an important move here, and theoretically, the line should now provide support to any downside move. It looks like you came down to it right in here, but if we zoom in on that, you'll see that we didn't miss it by a lot, but we didn't quite come down to it. That might be the expectation now. Here's that black line. This red line is the prior all-time high in January of 2018. So if you want to be a bull, you do not want the New York Composite Index to go breaking below these two lines. And they're not that far away. So technically, you can argue these lines should now be support for any downside move. And remember, we have downside projections of the New York Composite, and I think they're right down into this area right here. So the fascinating picture continues in the stock market. We'll be here to go through the puzzles with you, try and solve them for you, and try and give you a better idea as to which way the market is going to move next. Thanks for watching.